Okay, anyway, what do you want to do today? Besides, it's a beautiful day outside.
I'd like to go to the quiz.
You want to do the quiz?
Yeah.
Oh, fine. I don't think I printed out the quiz. You got a copy?
I got a copy.
Yeah. So, you got an extra one?
No, but I have them written down.
Oh, all right. I'll borrow hers. She already working with you.
You can't make fun of me for my answers if they're wrong, though.
This is Janelle Speedy here, and everything here is wrong. No, it actually, you got a few answers there. We'll see if those are right. All right, we'll share it with everybody. Okay, good. But she's going to be a marketing major anyway, apparently, she says, so we don't care about her. So, right? So which ones do you want to do? Anyone in particular? We did page 5, didn't we? Yeah, or number 5 rather. We did the last one, so we don't need to do that again, do we?
Just go through one.
Yeah.
Go 1 and on.
Yeah.
1 through 4. All right, you got it. See how flexible this is? I want you guys to remember on my evaluations, it's the easiest class I ever had. We could do whatever we wanted, you know, that kind of thing. Sure, put that. You know, don't worry about it. Sure, take it. It's easy. Yeah, okay. Anyway, I like the ones that are out for the whole world to see. I've only got a few out there. They're not real horrible, but every once in a while you get something really upset with you. Yeah. All right, so we'll do Ernst Company first. What's the difference between this and the first quiz we did, you guys? Oh, if you don't have a copy of this, the rest of us don't care. Right? You're not bothering to get ready anyway. What the heck? It's going to help everybody who is really prepared. If you tube the quiz, it really helps their grade, right? Because then I can afford to give F's and D's to people, so I can give a whole bunch of A's. I'll still have a normal GPA. So if you don't have it sitting in front of you, everybody thanks you for that, right? I mean, this quiz is Friday. You had all weekend, right? When you do the practice quiz, most people have it sitting in front of them. A few of you might not. All of you might have outline or something. You might have already worked it. Did you already work it?
A little bit.
A little bit. Okay, so you at least looked at it. Just notice you count there. They set in the front. Okay. All right. Anyway, what's the difference here, you guys? We now have beginning balances. Of course, after when you start the business, all the beginning balances are 0. But every year after that, of course, there's a beginning balance, which is the ending balance of the last year, right? You guys have seen those ridiculous shows on New Year's Eve, where does the ball go up or down? Whatever it does, okay? How many times do you watch it? You don't know. Anyway, you don't know either. Anyway, the ball goes one direction or the other, right? Then it's a new year, right? Maybe it goes up and then falls down or something. Disaster. No, it goes up and then it falls down.
Like they put it up before midnight and then it comes down.
They drop it.
Yeah.
That's probably bad news. They should be going the other way. One thing's going, oh, yeah. So how much time is there between midnight and the next day? None, right? Millisecond, nothing. So how many transactions are there between years? How many business transactions are there? None. So the ending balances of 1 year, guess what, are the beginning of the next. That's it. All our students have to go, you didn't give me a beginning balance. What are you talking about? I gave you the end of the last year. That's the beginning of the next year, isn't it? What's going to happen, though? You're going to close all your revenue and expense accounts, right? When do you do that? When do you do that closing entry that you read about? I hopefully did a problem on. I throw that in quizzes sometimes. I don't know if it's on this one or not, but I throw out in quizzes sometimes. Big deal. On a test, on a final. What do you do for the closing entry? You close all the revenues. They all have credit balances. How do you make them 0? Debit them for whatever's in there. Expense accounts all have debit balances. How do you make them 0? Credit for whatever's in there. What's the difference between that debit to the revenue account and that credit? There we go. Okay, and that credit to all the expense accounts. What's the difference, of course? It's the net income, which is going to be a credit, right? You can go to income summary if you want, like the author does, or you can go straight to retained earnings. We're going to put it in retained earnings anyway. What if you go to income summary? What are you going to have to do with the balance in income summary now? Debit it and put it into retained earnings anyway, right? So income summary would just be a temporary closing account, clearing account. Okay? And a lot of companies use that because there might be a number of adjustments to run through that. Okay? It's fine. So what happens though? Now all the revenue expense accounts are 0 when you start the new year, right? So you can assume they're 0, can't you? This is saying it's the beginning of the year. Okay? Good. All right, so what do we want to do? Let's write down everything we know, solve for what we don't. So let's do Ernst Company first. I can't believe you guys want to spend time doing this. You already did it. That's okay. All right. That's a joke. Not a funny one, but it's a joke. Okay, let's do Ernst first. How about doing something like this? By the way, you might think I'm memorizing how to do this. I don't know what I'm doing. My experience has been over the years. But if you can really do this and you can do it fast, you do know what you're doing. Right? You really got the relationships down. Okay? And then if I give it to you slightly differently, right? Okay, so what do you want to write down here? We got 2000, oh, be careful. Where's 2011? In the second column. This is how we put them on financial statements, by the way. We put the most recent year first, and then the previous year next to it. What do they do in a lot of accounting problems? Put the most recent year first, and then the later year, right? Got the idea, or I'm sorry. Put the earlier year, and then the later year, right? Reverse the order, in other words. Might have done that on the other quiz, I don't know. Okay? So what do we want to do? The beginning balances are at 2011, right? The year ended December 31st, 2011. And the ending are December 31st, 2012. Everybody agree to that? Okay, so good. Let's be careful with that, because now you're going to have beginning and you're going to have ending balances. And we're going to be analyzing the change in those. So we'll do beginning and ending all the way across there. And then it also lists, of course, income. And that's just going to be the current year for income, right? This is going to be for what happened in 2012 for the income statement. And then they have contributed capital, and I bet we're going to do contributed capital and retained earnings separately. Huh? I bet that happens again. Okay, so here we go. Let's plug in what we know. What do we got? Retained earnings at the end is 150, right, everybody? And I can assume it's a credit unless it says it's a debit next to it or something strange, right? Okay. Then we know liabilities at the beginning are 330. Is that right? Okay, cool. All right. Owner's investment is 50. What do you bet the owners during the period put in 50, huh? 50 going in here. Okay. All right. Or no, wait a minute. Owner's investment at the beginning is 50. Okay, the beginning is 50. Okay, it's not for the current year. Okay. No, it isn't. Contributed capital is 100. Owner's investment was 50. I'm sorry. So it started at 100 or ended at 100? Whoa. Be careful. Screw it up. Okay. It ended at 100, didn't it? Is that right, everybody? And it started at, we don't know, and they added 50. Everybody agree with that? There we go. In the right place. Assets, what do we got? At the beginning is how much? Is that the 700?
Yep.
Ending is 600. Okay, good. So there's some things we can solve for, huh? Revenues are 400 at the end of the year, right, guys? Because, of course, they started with nothing. Dividends are 10. That would have come out of retained earnings. Everybody agree with that? Okay. And then we've got, I did the contributed capital, didn't I? Did I write down everything? I did, didn't I? What can you solve?
You can solve for equity.
Okay, what's beginning equity?
370.
370. So we solved that one, didn't we? Everybody agree? And 700 less 330. Okay, now what? Oh, come on. There are two unknowns here I can't solve. There are two unknowns here I can't solve. There's one unknown here I think I can solve. Can I? Careful. I know the 150 ending, right? I know what am I going to, this is the dividend. What am I going to add to it? The net income, or subtract the net loss. And then I'd have to have a beginning. I think I have two unknowns there too. 1, 2. Can't solve it yet, can you? What can you solve right now? You can't solve this one over here. You can't solve this one here. And you can't solve this one here. I made this one a little tougher, didn't I? What can you solve, though?
Beginning.
Yeah, contributed capital at the end of the year is 100. We contributed 50 during the year. What do you think the beginning was?
50.
I think it's 50. Okay? Everybody agree with that one?
Yeah.
Now we got it made. We can do something else. There was another one we could have done, by the way. What was the other one we could have done? Oh, we could have done ending equity. How about 100 plus 150? What's ending equity? 250. So you could have done that one. You could have done either one of those first. Be fine. Whatever occurred to you. Well, now that'll give me ending liabilities, won't it?
Yep.
What's ending liabilities? 350. Excellent, guys. You got it going, don't you? Okay. Well, what do we need? Expenses and net income I still can't do that way, right? Over on the income statement, I can't do that. Okay, my beginning and my net income, and those are two. Oh, but what do I know? What about equity? What's ending and beginning contributed capital? 50. I don't know beginning retained earnings, but I bet I can calculate it. Well, come on. Contributed capital plus retained earnings, we just did it. Contributed capital plus retained earnings, we just add them together to get equity. Don't you know the beginning equity? 370, right?
370 minus.
Oh, 370 minus the 50 contributed capital. What's beginning retained earnings? It's 320. We got that one now. Don't we? Now I only have one unknown, right? What's net income? If you start with 320 in retained earnings and you now only have 150, how much went away? 170, which means what? You paid a dividend of 10. What else must you have done? Must have a net loss. Fantastic. How big is it? 160, and we've got that one. If we know it's not net income, it's net loss of 160. This is a credit, that's a debit. What do you think the difference is? Expense has to be what? Bigger, right? If you have a loss, what would it be? 560, and we got them all. Okay? Can you do that? Being a loss just really threw you off on this one, maybe? Oh, there couldn't be a loss in a company, right? Companies never lose money. Yeah, they do. Hey, everybody good? This isn't hard, is it? Okay, do the next one real fast. Do it yourself. Then we'll put it up. I think this is a 2-minute, 3-minute problem. 5 points out of 30, or out of 25, I guess it was here. Probably give you 5 minutes to do it. Like that. Quiz. Okay. It's plenty. They're all brilliant. Good. Did you do that comprehensive problem or success? Very good. Thank you. I wrote the answers. You guys ready? How many have answers? Halfway there, hurry up. You guys. That means you guys value this, right? All right out for you. Right, everything you know? It's all what we know. No. You got it. My friends. It was pretty funny when you get scholarships. People in 211, young 211, they got a deaner in that when I first quit. The rest of the time. They did good investments. They're profitable. You get in trouble with quit. All right, let's give it a shot. You know, you don't have to set it up like this. You can work these problems any way you want. This just, you know, keeps it straight for me when I do it. So, I know, why not? We're going to use the beginning and the ending both, right? Of course. Figure out what changed. Okay, and then, the organized. Capital. Okay, what'd you know, guys? Contributed capital at the beginning is how much?
200.
What is it at the end?
100.
Yeah, that means they bought back treasury stock or took some of their own interest out. It's not a dividend, right? Okay, but there's 100 coming out. So the withdrawal is 100, so it'd be 100 coming out of that. So there's one of the answers. Only it's negative, right? Okay, withdrawal. Okay. So later it'll be buying back treasury stock. Revenues are 240. Okay, net income we don't know. Liabilities start at 270, do they? Make sure I put them in the right place. We're only good at right up. 300 ending. All right. And be careful yourself what you're doing. 160 beginning retained earnings. Is that right? Ending retained earnings 200.
Yeah.
Is that everything?
Dividends are zero.
Oh, dividends are zero now. We're only going to need that. Okay, dividends are zero. So I don't know. We can solve a bunch of stuff here, can't we? What can you do? Beginning and ending. Beginning and ending equity, yeah. So what's 200 plus 160? 360 here. Okay, and you want to do ending too while we're at it? Fine. 100 plus 200 is what? 300. Then what can you do? Add them together and get the assets. What was it at the beginning? That's 630. At the end, it's 600. Okay. Let's see. So what happened to retained earnings? We took nothing out, but it went up by 40. What's the 40? That's your net income. Absolutely. There's your net income. So we got those, we got those. I don't think I asked for those two, but we calculated them anyway. Had to. Okay, so if this is 40, what's your expenses? 200. And we got that one now, right? I don't know about you guys, but I think this is. How many have them all? Okay. But how could you not do it? What'd you miss? This one.
Where do you get the equity from?
Okay, what we did is we took, what's your equity consist of? Contributed capital and retained earnings. You think of all your wealth that you personally have. If your assets exceed your liabilities, where did it come from? Somebody gave it to you, that'd be contributed capital, right? Parents, grandparents, right? Or you earned it, that'd be retained earnings.
Okay.
Got it? That's where your wealth comes from, those two sources. So what we did was we added together the contributed capital and the retained earnings, and we did it both times. That's it. Got it?
Got it.
Good. Yes.
For the owner investment, do we need to put the brackets?
Yeah, put brackets around the owner's investment because it's money coming out. Yeah, so I give you one like that, you'd have to have brackets around it because it's not just normal. Okay, that's a reduction in the owner's investment. Got it? That'd be buying back treasury stock, we call it. You can buy your own stock out in the stock market if you want, right? You can buy owners out. If you don't like the owners, I'm going to get rid of them. I'm not kidding, right? You can buy their shares, give them a premium price for it, or to stop somebody trying to take over your business. Sometimes you buy them at a premium price, get rid of them. Yes.
On the exam, do we need to write that it's like -100 that we've lost?
Yeah, it's reduction. You put brackets around it or withdrawal, say withdrawal next to it, yeah. So it doesn't look like you thought it was a contribution, not a contribution. It's negative, yes. Okay, good. That wasn't bad, right? You do these a few times, they get easy, don't they? Right? Start understanding what's going on here. That's kind of what we're trying to do, I think. Not sure, but okay. So what do you think in 2? What would be the effect on the statements? Right? And then number 3 is also what would be the effect on the statements. 2 things, huh? Okay, these are adjusting journal entries. What would be the impact of doing them or not doing them? Okay, so the effect on the financial statements is whether it's over or understated, right? Or that would be what? If I fail to do it, what's wrong? And what would the effect be if it's increase and decreases? What does the journal entry do in the first place? What you got to do anyway is figure out what the journal entry would do in the first place. These are these problems. I figure out what the journal entry is doing in the first place. What is the journal entry? What does it do to the balance sheet and the income statement? Got it, guys? And then if it's asking you whether it be understated or overstated, it's just the opposite of what the journal entry does, isn't it? So I could change these really easy. I just flip-flop the understated, overstated into number 3 and put the increase, decrease into number 2 and make it a different problem. Just read carefully. That's all. What is it asking for? Okay, so let's give this a shot. Number 2. All right, they say they failed to record the necessary adjustment for insurance for the year. Okay, a $3,000 payment was made on March 1st for insurance coverage for 2 years starting March 1st, and their year end is December 31st, I said, and it was recorded as a deferral, and I even put in parentheses asset. Isn't that nice? It was recorded as a deferral, which is an asset, of course. What is it called? Insurance that we deferred, recognizing the expense because we haven't used it up yet. Prepaid. That's prepaid insurance, isn't it? That's the asset. What if it said it went to and that could be a real or a permanent account too, I could call it that, couldn't it? What if it said it went instead to an expense account or a nominal account or a temporary account? What would you have debited when you bought the insurance? The expense account, the nominal account? What is it? Just explain this to you guys. Last time you took a few days off and you didn't study this, did you? Or not enough, okay? Think about this. What is it if I go to an expense account when I bought the thing instead if I went to an asset account? I didn't go to debit prepaid insurance. I debited what? What's it going to be when I use it up? Insurance when I use it up? Insurance expense, of course. If you went to an income statement account or a nominal or a temporary account, of course it's insurance expense, isn't it? You debit insurance expense and credit cash. Then you're adjusting it to know what would you have to do seeing you didn't use it all up. Take some of out of insurance expense with a credit and debit what seeing as you didn't use it up? What do you call insurance you haven't used up yet? Prepaid. Prepaid insurance. So we'll do this both ways. Okay, let's do it the way it's written here first. Okay? So what will we do? So we got prepaid insurance. That's where they're going to go with it, right? And we've got insurance expense. I want those 2 accounts to have the right number in them when I do a balance sheet and income statement. Prepaid insurance is going to go on the, well, yeah, it's an asset, right? But what financial statement? Prepaid insurance. Balance sheet, it's an asset. Insurance expense, where does it go? Income statement. I'd like the right number on the balance sheet. I'd like the right number on the income statement. I'd like to have the right net income, the right equity, right? So we're doing here, okay? So just with this policy, what did they do when they started? Debit what? What did it say they did? They went to the asset account. Right, a deferral account. You guys said debit prepaid insurance. Some of you did. How much? $3,600. Okay? And this is on March 1st. Not 31st. 1st. Right? Got to be careful of the date. What would you credit, of course? Cash. Now, you don't have to write this down. I'm just showing you what they did. What you could do is you could say, oh, I have $3,600 in here relating to this policy. That's March 1st. I have nothing in here related to this policy, right, guys? We know that. It's now the end of the year. It's December 31st, huh? And here's the thing. Do not decide, as we get into things where the business transaction is a little more complex, do not decide that you can't do this. That's nonsense. Everybody sitting here can do this if they work at it. And I think nobody sitting here will be able to do it without working at it. You guys want to go into real careers, don't you? I just tried to teach kindergartners. I should have worn a different shirt. It was warm in there, and I'm soaked in sweat by the end of it. And the kid said, you poured water on yourself. And I says, no, it's sweat. It's like I went and ran a mile. And really it was. The teacher's just laughing. It's great. No kidding. It's work to teach people that are this tall. It's not any work to teach you guys at all because I don't care if they're not. It's your business, right? In their case, it's really important, isn't it? They can sit here someday. In your case, it's up to you. So don't decide you can't do it. Don't decide you don't want to do it. You do want to do it. You want to have a good GPA. I don't care if you ever take another accounting class in your life. I don't care if you're not a business major. Right? This is going to be the only business class I ever take in my life. If you make that decision, still get a good grade. Why not? Build your GPA, build your resume. Don't blow off anything that affects the rest of your life. Why would you do that? Now, I'm not saying every single grade is the end all of the world. You could get a D in this class and become a multimillionaire. Of course you can. It'll be harder than if you got an A. Most likely. Statistics kind of imply that, right? I mean, we can find all kinds of examples of people who didn't go to college who got really rich, right? You don't have to do it this way, right? You don't have to do this. But whatever you're doing, do it, okay? So, guys, and the reason I say that is some of you, we're just turning your brains off, I can tell. This is getting too hard. Oh, man, you're just dead in the water, man. If it's too hard now, what's going to happen? We're on the last chapter. Well, not the last one, that's easy. But the one before that. The couple before that are just unbelievable, you guys, compared to where we started. They are, aren't they? Yeah. Okay? They're unbelievable. So, guys, let's go. That's it. Guys and gals. Okay. All right. What do we want to do? We want to decide how much should be at December 31st in there and how much should be in December 31st in there. That's it. Okay? So, how much got used up? How much didn't? Okay, what you got to know is the 3,600 covers how many months, gang?
24.
It's 2 years. Divided by 24 months is a good way to go. It's 2 years. How much is that?
150.
150 per month. Then all you got to know is how much time went by. And that's how much you used up. How much time didn't go by is how much you didn't use up. Would you agree with that? This is not fancy. This is no big deal. Okay, how many months went by between March 1st and December 31st? And be careful. It's not March 31st, it's March 1st. So how many months have gone by this year? January and February? How many are left? 10. You got it. So it's 150 times 10 months. Everybody good? That's how much time went by. Okay? Everybody agree? How much time went by? So what do we think? We used up how much of it? 1,500. Everybody agree? Okay. What would you debit? I used it up. What would I debit? If I asked for the entry, if I asked it, and we do on the problem 5, we asked for the entry, didn't we? So what would the entry be? Debit what? Insurance expense, because you used it? Excellent. And credit what? Prepaid insurance. There's nothing to this. Excellent. Okay? So I'm going to have 1,500 go in here. I'm going to have 1,500 come out of here. What's it going to give me as a balance in insurance expense, of course? 1,500, right? For that one policy. What are we going to have in prepaid? 2,100. Is that right?
Yeah.
What does that represent? How many months are left, you guys? We used up 10 out of 24.
14.
14. What's 14 times 150, of course?
2,100.
2,100. Boom. We know what we're doing, don't we? That's it. What's your journal entry going to be at the end of the next year? It'll be for 12 months, you guys. We'll use up all but 2 months. What do you think it's going to be?
300.
Well, we're going to balance from prepaid to be 300. It's 2,100. What would you do to it?
Take 1,800 out.
Credit it for 1,800. What would you debit for 1,800, which is 12 months at 150? Insurance expense. Boom, we got it. What if I'm doing monthly financial statements? I'll do 150 every month. Debit, insurance expense, credit, prepaid insurance. Wouldn't you? What if I'm doing quarterly financial statements? Probably 450 every quarter, huh? Debit, insurance expense, credit, prepaid insurance. It's easy, isn't it? By the way, if you know how to handle prepaid insurance, you know how to handle prepaid salaries, prepaid interest, prepaid rent, prepaid any expense. Yeah. Power, guys. You know to handle any deferred expense, which is a prepaid, of course, right? Okay, there's nothing to it. If you know how to do one, you know how to do all of them. So you don't memorize how to do insurance, huh? It's just a prepaid. It's just a deferral, okay? Good. So what would be the effect of doing this entry? If I was asking for increase or decrease, what would you say? I think you are increasing an asset. This is the adjusting journal entry. This is what they're after, right? Not the original source entry. It's the adjusting entry, they said, right? I said. Insurance expense would increase, right? By $1,500. Everybody agree? So let's do it like this. You can do this if you want. You don't have to write this down, but if it keeps you from making a mistake, it only takes a second, right? This is fast. Let's write it down. What happens? Debit insurance expense, we already know it increases expenses. That's what we're doing, right? Prepaid expenses gets credited. That reduces an asset. Everybody agree to that? Okay? And that increase to expense would do what to net income? Reduce it, which would do what to retained earnings, which is one of the equity accounts? Reduce it. What would it do to liability, seeing as there's no liability in that entry?
No.
How about nothing? How about revenues? There's no revenue in that. Nothing. Everybody got it? But that's not what this question asked for. But you need to know that in order to answer the question, okay? Overstated or understated? You guys, you failed to reduce an asset, prepaid insurance. What would be wrong with it if you didn't do that? Overstated. Liabilities, you should have done nothing and you did nothing. No effect. Equity, you should have reduced it and you didn't. Overstated. It's got to be the same as assets anyway. Kind of drives me a little crazy if you said overstated here and understated here. I'm like, what? You don't know assets equal liabilities plus equity? Really? You're not letting yourself think, are you? Right? Get organized. Revenues? No effect, huh? Expenses? They need to be increased. They would be understated. But net income needs to be reduced. It would be overstated. Ta-da! Those are the answers, huh? And you can look, you guys, you can just take this sheet of paper and sit and stare at it and write down the answers if you want. I don't care. If you keep that much in your brain at once, go. I don't care. Whatever's faster and accurate. Being fast and getting the wrong answer doesn't help, right? Being too slow doesn't help either, of course, right? So, but you're going to have time. You know what you're doing, you're going to have time.
Would you have to pick by how much it was overstated or understated?
Oh, yeah, you would. You would have to say the dollar amount. Absolutely.
Just so.
Thank you for that. Yes. I'd want to see the dollar amount that it was, okay? So, yeah, $1,500 in every case, right? Or zero. Okay? Everybody good? Look at that. You got them right. Yeah. Wow. Okay. What if this was the other way around? Let's change this problem. Now, this is not what's in the quiz. Let's change this problem to be instead, I tell you they went to an income statement account, or I went to a nominal account, or I did not defer it, right? I went to a temporary account. Okay, then what would the journal entry have been on March 1st, guys, if I do it that way? What would the journal entry be? Still credit cash, right? Or was it $3,600? What would we debit for $3,600? I'm not going to put it into a prepaid because someday I'm going to use it up anyway. So what do I put it in? An income statement account relating to insurance. How about insurance expense? Come on, you guys. You guys losing your confidence? Is it just you had a really nice break and played and had fun in the sun too much? That's what I did. Okay. Now my wife made me work at the yard one day. You ought to see my yard. It's a jungle. Now it's a jungle with a whole bunch of stuff cut down. Piled up in it. We're going to leave it there till the end of winter. Decompose. Compost pile. Told my wife that too. Didn't think I was funny. Okay, anyway, so that's what they did anyway, huh? So what do we got? Prepaid insurance? Nothing? Right? Related to this policy? Insurance expense, how much, gang? $3,600. Okay. Gee, how many months is that for? 24. I think it was $3,600. I don't think you'd have to calculate this again. 24 months is how much per month? $150. How many months are used up? Not all 24 used up. This is March 1st. It's now December 31st. So you're in still December 31st, and I want to know what this should be at December 31st. How much got used up? 10 months. Nothing's changed here except what we debited, right? Same company, same insurance policy, same number of months, Same amount of time went by. It's 10 months. How much was that? 1,500. What did you want to be 1,500? That's what you used up. What account do you want to be 1,500?
Insurance expense.
Insurance expense, of course. How much did not get used up? 2,100. Everybody remember that? What is that? It's the other 14. It's prepaid insurance. It's the other 14 months at 150, right, guys? So, don't you think this one should be 2,100? Don't you think this one should be 1,500? Isn't this one 0 right now? Isn't this one 3,600 right now? How do you get from 0 to 2,100? This is an adjusting journal entry. It's adjusting from where you are to where you want to be. If you've got nothing in there and you wish it was 2,100, what do? I think you debit it for 2,100. Absolutely. So here's our adjusting journal entry, guys. At December 31st, my adjusting journal entry, if I gave it to you this way, right, it would be debit prepaid insurance to bring it up by 2,100. And if I didn't use it, what am I going to have to credit, everybody? Where should it not be? Where it is now. You got 3,600 in insurance expense. You wish it was only 1,500. I bet you credit for 2,100 to get down where you want to be. Isn't that it? I can see on the faces of those who did not study or those who are trying to memorize. This is magic. Whether you know how to do this, is this magic or just common sense? Just get there, like before Friday. Okay? I'm really going to expect you to know how to do this. This isn't a pretend quiz, this last page here, you guys. This is a normal quiz. Okay? Is this something you can finesse? You can just sort of halfway know what you're doing and come in and get half of them right or 2/3 right. This is almost all I know. It is. In my intermediate class, half the students have a D or an F and the other half have an A or a B. I have no C's. Almost normal. Some of them thought, oh, I'll be all right. It'll be like principles was. And I told them it wasn't. Right? It's nowhere near. I really do think you're going to know everything that's in those 2 chapters. I mean everything. Right? It's only in 2 chapters. So you've got 2 people with 2.5, one with a 3 out of 25. Then I have people with 21 and 20. Think they know a little more? Who would you hire to be your CPA later? The person with 2.5 or the person with 21? Who do you want? Not that one score makes any difference, because some of the ones with 2.5 are going to suck up and do it, right? But the one with 21 keeps doing it, though. If they do, I'll be shocked if they do. Okay, anyway. So let's do the other one. Oh, let's do the over-under on this thing. These would be different, wouldn't they? Of course. What would be wrong? What would be wrong if you didn't record this? How would you approach that? What would be wrong if you failed to record it? There's your adjusting journal entry. What would be wrong? Okay, what would this entry do? Prepaid insurance is a asset. I want to debit it. So what would I do? I'd increase it by 2,100. Everybody agree? What's insurance expense? It's an expense. I want to credit it. What would happen to it if I credit it? You go down by 2,100. Everybody knows that, right? Okay, you know how to debit and credit things, what increases and decreases. Plus, in order to do the journal entry, we had to know what we were doing. All right, so what would that do to net income? Increase by 2,100, right? Lower expenses. What happens to equity? Increase by 2,100. And you can check if you did it right, because this side has to equal that side, doesn't it? How about liabilities, everybody? No effect. Nothing. How about revenues? No effect. Nothing. Okay, let's do overstated and understated. If it should be higher by 2,100, what's wrong with it? Understated. No effect here? How about this one, equity? Understated. They got to be understated on both of them anyway, or overstated on both of them, something, right? They got to agree on both sides. Okay, revenues? No effect. Expenses? Should be lower. They would be overstated, which would make net income understated. Is that different than the answer we had the first way we did this? Yeah, a lot different. And besides, they're 2,100, not 1,500, aren't they? Everybody got the idea? So you got to read carefully, know what you're doing. All right, great. Let's do number 3. We're not gonna need a lot of time to do number 4, are we? Yeah, that was a nice one. Let's do number 4, it's fun. Rent expense, how do you increase it? Every expense account, debit. Unearned revenue, it's a liability, how do you increase it? Credit, gotta know it's a liability. Accumulated depreciation is a asset, but it is a contra asset, so you increase it with the opposite, credit. Prepaid salaries, debit, because it is a asset, right? I like to use something. You gotta make sure everybody gets 1 point. That's funny. That's a joke, come on. All right, so let's do number 3.
What would be the effect on financial statements of recording the payment in full of a $10,000 note receivable plus interest at 6 months, 9% per annum? No interest has been accrued. What does that mean?
I did not debit interest expense and credit interest payable. I'm not accruing interest every month, right? That's what accrual is of interest, right? Debit interest expense, credit interest payable, accruing any expense. Debit expense account, credit or payable. Okay. It's salaries, debit salaries, expense and credit salaries, payable, it's accruing salaries. Right, guys? Okay. So it's 9%. What date did we get the money? Oh, it's just 6 months. So it's a whole 6 months. This is going to be easier then. But is that 9% for 6 months or 9% for a year? Even if I didn't say per annum, but if I just said it's 9% interest, still for a year, right? Unless it says it's 9% for 6 months. I've never seen a note written that way in my life. It'll say how much it is per month, or it'll say what it is per year, right? They don't say per year. It just is. Okay, good. All right, so 6 months at 9%. So what would you do? We're going to pay off an account named notes payable, right? It's got 10,000 in it. What are you going to do to get rid of it? Yeah, so it's adjusting journal entry. What we did when we got the note is maybe we debited cash for 10,000, credit notes payable for 10, or maybe we debited equipment for 10 and credited notes payable for 10, right? Whatever we got, whatever they gave us. We have a note payable credit of 10. The adjusting journal entry is going to be debit notes payable, isn't it? We did not accrue any interest, so what are we going to have on it?
This wouldn't be notes received. It says notes received form.
Oh, jeez, thank you, sir. Good man. Stop me from screwing up again. Well, I got it all wrong. Okay. By the way, that's a real common error. You bet. It is. Okay, thank you very much, sir. So what happened, I guess, was we loaned money, huh? Yeah. So we credit cash and debit what? Notes receivable, which is an asset. Thank you very much. Okay? All right? Switch things up. Did myself. Okay? Yeah. So notes receivable is 10. So what's the deal going to be this time then? I'm going to credit notes receivable, aren't I, to get rid of it, make it 0. Everybody agree? That's going to be my adjusted journal entry here to make that nothing. So I'm going to credit notes receivable. All right, so when I say I didn't accrue interest, what would this accrual have looked like if I had accrued it? This is accruing revenue, isn't it? So how do you increase revenue? An account named interest revenue. How would you have increased it? Revenue. Credit. So I would have, if I had accrued it, I would have credited interest revenue, okay, or whatever the amount is. And what would I debit if they didn't pay me, if I had been accruing it? They owe me, don't they? Interest what? Interest receivable. So you can have any kind of a receivable, of course, whatever it is. Interest receivable. Make sense? I didn't do that, though, did I? Okay? So I didn't do this, so what do I have to do now? Are they going to pay me more than $10,000? Don't they owe me the interest too? Yeah, so they're going to give me cash equal to what? 10,000 plus interest, right?
Right.
So it's going to be 10,000 is the note receivable. 9% would be a whole year, which is what, $900? But it's only half a year, right? 450. Excellent. 6 months out of 12. Okay, so divide by 12 and take it times 6, whatever you want to do. 450, just half of it, 6 months. Okay, what's that going to be to me? Well, more cash. They're going to give me 10,000, right, to pay off the note, and then they're going to give me another 450 for the interest. So is it going to be 10,450? Yeah. And what is the credit going to go to? Oh, it's the interest revenue that I haven't recorded yet because I did not do an accrual, right? So when you credit interest revenue, everybody? Yeah. Got it. Okay? So revenues work just like expenses, don't they? Just a mirror image. Okay? You can defer them or accrue them. This is an accrual of revenue, isn't it? Well, would have been an accrual down here if we had accrued. Okay? All right, good. Let's see what the impact of this is. Assets equal liabilities plus equity.
revenues plus expenses is our net income. Okay, gang? What'll this do? Cash is an asset, right? It would increase it by 10,450, is that right? What else happens? Interest revenue is a revenue, what would that do? Increase it by 450, everybody agree with that? What's note receivable? So I did this one and this one, right? What's note receivable? Note receivable?
Asset.
An asset. What does credit do to it?
Decreases.
Decreases it. So what happened to assets? Net effect?
Increase for.
Increase 450. So you'd say it was increased by 450. Okay? Huh. Well, what would an increase of revenue of 450 do to your net income? Increase by 450. What would that do to your equity?
Increase by 450.
Increase by 450. So I got that one too, don't I? Okay, that one, that one. What about liabilities? Nothing, right? Because there's no liability in our journal entry, right? Debit and asset, credit and asset, and credit revenue account, right? So there's no liability. And equity was the increase by 450, right? Expenses? None of those either, right? Okay, so increase what? Assets by 450, liabilities no effect, equity increases by 450, revenue increases by 450, expenses no effect, net income increases by 450. What if I asked you for overstated or understated instead? If you fail to do that, assets would be what? They need to go up by 450, you guys. What's wrong with them now? Understated. Liabilities, no effect, right? Equity? Understated by 450. Revenue? Understated by 450. Expenses? No effect. Net income? Understated by 450. So, can you do these? Answer yes. Work lots of them, work lots of them. I've actually had students that work every problem, probably not the alternative ones, but work every problem at the end of every chapter. Feel free. Whatever you need, you know what you're doing, right? Depends how paranoid you are, I guess. Hey, you got it right, too. I didn't check it, that was for credit. Kidding. See you guys. Have a good one. Study, study. Man, we got done early in class. Really? You know, oh, we didn't do the 9%, right? We buy insurance. You can either debit prepaid insurance or debit credit. At the end of the year, with too much prepaid, not enough expense. Or you insert all the insurance expense. And at the end of the year, you have too much insurance expense. How would you fix it? Credit insurance expense, debit prepaid. Figure it out. That makes sense. Play with those a little bit. Make up an example for rent. Okay. Don't take the risk of going for an athletic event. Okay. Email me and say, Pete, please send me all the practice questions or whatever.
Well, I have the one from,
Yeah, practice quiz, test it. You can go to YouTube directly.
yeah, I've already
Figure that out. Oh, you're one of my hate us. And once I got that, I was hard to hear. Take a deep breath, right? Well, no, just, you're only making, you're only making a payment of 12 months to 0.5. So what are they going to want? 12.5 or 0.5. They're really not going to be good. You're loaning me money now. So they want you to keep the whole 25. So I think you want to think you're 55. But remember, it's only 6 months. So you got 6 months, 25,000. Add that to 12.5 they pay. That's it. Okay, that makes sense? Yep. And then the next time, you only have 12.5 if you're doing 5. Right? But you pay that. Right? Same interest rate. So remember that the interest rate is for a full year. You have to pay whatever portion of the year. And remember that the payment is to be reduced to the term. Got it.